Buddy, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 27th of October, 2017, and we just finished up another positive week for the most part for equities. The S&P 500 gained fractional, but most of that came, of course, today. The Nasdaq had the biggest week, up close to 2%, and those semiconductors just continue to blaze higher, up 40% year to date. Biotechs, though, continued to show that they are having some trouble here. So let's take a look at the action. We started out the week right here at on Monday, that is right here. And for the first couple days, we saw some pretty good selling actually on Wednesday. And I was pretty cautious about the market until I was saying that I thought we needed to get back above and hold above this level 256 and a quarter. And on today's gap higher, we did gap higher and then held that volume weighted average price and just continued to rally throughout the session. So if we take a look at it here, once we got back above the volume weighted average price and made a new high for the day, it was just up and away as the shorts continue to have big problems in this market. The intraday pullback that we saw on Wednesday did come down to that rising 20-day moving average. So we remain in a healthy uptrend as far as the S&P 500 goes, and to try to short this thing for more than just quick trades doesn't really make any sense at all. And same is true for the Nasdaq. The Nasdaq held above that prior band of resistance. It came down through the 20-day moving average, but again held that level. And what I thought was important was that it held the volume weighted average price from the gap down over here in late September. So that volume weighted average price was tested almost to the penny in that same area where the prior resistance was. And no one expected this type of gap today, but obviously we had some huge movement in some individual names, and I was thinking it had to get back above and hold above 148. My thought was it would probably do something like this, but we have to listen to what the market gives us, and most importantly not fight the primary trend. The Russell 2000 kind of choppy still, but I think it's setting up for a likely break, continue higher. We've been building energy here over the last really pretty much last month or so, and we've had a couple of good little shakeouts that have been bought up quickly, so the buyers remain in control of the longer term trend here, and I wouldn't be surprised to see that this market makes new highs next week. Semiconductors again up over 100 now, and up 40% year to date. The key level that we bounced from this week was from this gap in October, which was held on the last harsher sell off, and then held again this week. And the short sellers keep giving it a try, but once again, when you have such a powerful uptrend, there's no point in fighting it. It's not even closing below the 10-day moving average. Biotechs were the weaker area, and as I've mentioned, numerous times, we've been looking at these volume-weighted average price levels, and this is where the sellers regain control. Once it broke back below that volume-weighted average price a couple weeks ago, as it broke back below there and made the lower low below a declining 5-day moving average, sellers were in control. Now, I would have never guessed it would have pulled back like this, but the point is that we're not trying to catch every single move, but if we can catch the uptrends in the up legs during an uptrend, that's what we're looking for, and we want to avoid the periods of consolidation through time or those price pullbacks. Now, hindsight would tell you there were some great shorting in there, and maybe some of you got it, but when I look at the longer term trend, what I like to do is participate in these upward movements, exit as it turns sideways, anticipate the next move, participate, exit, and then avoid these pullbacks, because the sum of the rallies in a longer term trend in any trend will always be greater than the sum of the decline. So some of the bigger winners this week obviously were Amazon, which just rocketed higher after off of earnings today, and we came close to testing that year-to-date volume-weighted average price a couple weeks ago in there, and that's been just up and away. Facebook at a new high, as is Google. Just some amazing moves. Intel had a really big move this week, and actually so did Twitter. But it's not a one-sided market. Of course, Celgene was one of the bigger losers in the biotechs, and this is why buying pullbacks is very difficult. It seems like the theme this week was if it's strong, keep buying it. If it's weak, keep selling it. We saw that in Celgene. We saw it in Expedia. Even General Electric. I mean, this thing has just been horrific on the downside all year. So you can't buy brands. You have to buy stocks of individual companies which are in uptrends, and try to avoid, when you get these earnings related events, avoid those. Do what you feel is right for your personal time frame. I talk about this stuff every single day for subscribers at Alpha Trends. I hope you had a good week, and talk to you again next week. Thank you.